In this presentation, we will discuss accounting for expenses related to a non-governmental, not-for-profit organization, a non-governmental NFP. The expenses will be accounted for using an accrual method. So we're going to be using the accrual method. When we think of the accrual method that's related to the expense side of things, we're thinking about the matching principle, or otherwise known as the expense recognition principle. The accrual method, as we know, can be contrasted with the cash method. With the cash method, we would be recognized the expenses when the cash goes out of the organization. Under the accrual method, the expense in essence happens when the item that we are using has been incurred in order to help us with the function of the project that we are doing, in order to help the organization, the not-for-profit, to achieve the goal. So once we have actually received the goods or service, that's typically when it would be recorded under the matching or expense recognition accrual principle. Expenses will be recorded as decreases in net assets without donor restrictions. So you'll recall when we had the revenue, when we're thinking about the revenue, there may be restrictions on the revenue when it goes into a not-for-profit organization. For example, if a donor donates money to the not-for-profit organization and says, I want it restricted in some way, then we're going to put a restriction on that. However, on the expense side of things, we don't think about the restricted items. Everything that's going to be recorded on the expense side of things is going to be recorded without restrictions. So we don't have to worry about basically labeling the accounts as either with or without restrictions on the expense side. They will be without restrictions. On the revenue side, they may be restricted or not. And then we're going to have to unrestrict them whenever the qualifications have been granted or done in order to release them from restrictions. Obviously, we're talking about net assets here because the expenses will then roll into what would be similar to the equity section. In this case would be the net assets section. The net assets is going to be broken out as well between with restrictions, without restrictions. When we do the closing process, the expenses will always be closed out to without restrictions. We'll show example problems related to this, and this will make a lot more sense. And we'll go through the whole process of recording the expenses and then that closing process of closing these out to what would be similar to the equity section, the net assets section. As we do, you'll see the added kind of complication of closing out items that have with restrictions, those that do not. Expenses will always not have the restrictions. And then it's going to be classified by the functional classification. So note, when we think about the financial statements, we need to classify it by function, not necessarily by nature on the face of the financial statement. So when we think about by nature, we're thinking about the actual expense categories, typically with things like the utilities expense, things like the telephone expense, and so on and so forth. When we think about classifying by function, then we're classifying by what the expense is used for. This could often be very useful for a not-for-profit organization because we're going to be giving the financial statements to the board of directors. Often people in a not-for-profit organization that might not be really familiar with reading financial statements, if we classify by function, then it's usually a lot easier or a more condensed financial statement, and we can start negotiation or talking from that point forward in terms of planning for the not-for-profit organization, and then get into more detail with the expenses then being broken out by function and nature, naming the type of expenses as well, if and when necessary. So the functional expenses, when we classify these expenses then by function rather than by nature, so instead of just listing out what the expense was used for, telephone expense, utilities expense, and so forth, how would we classify it by then function? Program classifications are from the provision of goods or services that help achieve the major purpose or mission. So we can classify by program then, and programs would typically include things like research, information, advocacy, and public awareness. These are the types of programs, basically the objectives of the organization. We can group the expenses into these type of objective type categories. Then we have the support activities that assist the not-for-profit organization in carrying out its mission. So we have the actual programs, what it's trying to do, which are basically aligned to its mission, and then the supporting activities that are going to be helpful to it, which are also types of functions that we can break out into. That would include things like the fundraising, that's a supporting type of item, and the management and general. So the management and general expenses is, of course, another type of expense, a type of grouping, a type of function that's not the actual goal, but it's something that's going to be a supporting goal to get to the actual goals of the not-for-profit organization.